Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 15th of August 2021 and we're publishing our gold and silver weekly update for the week ending the 6th of August and our forecast for the coming week. Now this video has the same content as the one we produced yesterday. It just has a different header and introduction. And so if you haven't listened to yesterday's, then please listen to today's. But if you have, then there's no need really to listen further other than the introduction. The week before last we saw gold and silver prices drop significantly. But this past week gold is recovering and has recovered somewhat many of its or much of its gains. But silver, though, having improved from the bottom, is still somewhat in the doldrums. So today we're going to assess where we believe both are heading. But before we do that, a quick shout out to our Crypto Plus channel, where later today we shall be reviewing Nikki's portfolio, which has grown strongly since our last inspection. So please subscribe to that channel and press the bell sign, the same as with this one if you haven't done so already, so that you will be notified by YouTube as new videos are released. And we've produced a link to the Crypto Plus channel below. So let's now take a look at gold and silver and markets in general. Okay, because of the numerous videos that we've produced during the last week on our morning schedule, we're going to try and keep this one as short as possible, but at the same time providing comprehensive information. And we've placed links to those videos, in case you haven't had an opportunity to listen to them, in the description box below. Now gold rose $15 last week, rising from $17.64 to $17.79, having hit a high of $17.80 and a low of $16.91, a rise of 0.9%. In sterling terms, gold finished the week at £1,283. That's up £12. And in euros, it closed at €1,509. That's up €10. Silver, though, fell 59 cents from 24.36 to 23.77, having hit a high of 24.40 and a low of 22.97, a fall of 2.4%, and this follows the previous week's fall of 4.5%, so it's somewhat in the doldrums. In sterling terms, silver closed at £17.14. That's down 41 pence on the week. And in euros, it closed at 20.15 euros. That's down 0.56 euros. The gold to silver ratio rose from 72.4 to 1 to 74.8 to 1. Now Bitcoin is up a further $2,784, following the previous week's rise of $3,970, which itself followed the week before that's rise of $5,989. And currently, as we produce this video, it stands at $46,371. Not forgetting that 3 weeks ago, it was actually closer to 30,000. The Dow Jones closed on Friday at 35,515, up 15 points on the day and up 307 points on the week. The S&P 500 closed at 4,468, up 7 points on the day and up 32 points on the week. And the Nasdaq Composite closed at 14,882, up 6 points on the day, but up 47 points on the week. So equity markets still in bullish fashion. Brent crude closed at $70.59, down just 11 cents, and WTI crude closed at $68.44. That's actually up 16 cents on the week, but we had more of a divergence between the two last week, and we said they would marginally correct, which they have. The dollar index stands at 92.51. That's actually down 0.29 on the week, though we did see it above 93 during the course of the week. So it has come back quite a bit. Now we concluded last week's video with the following forecast. Quote, "Well, there may be a slight correction Monday, but the sentiment for the moment is indeed bearish. So next week we're expecting to see gold trade between 1675 and 1825, with 1625 and 1875 as outliers, and silver to trade between 23.50 and 25.50, with 22.50 and 26 as outliers. And we know quite a few people were surprised at the lower end of our trading range predictions. Well, gold traded last week within a range of $89, and that compares to the previous week's range of $32 difference, with a high at $17.80 and a low at $16.91. Falling nicely, in fact, within our trading range forecast of $16.75 and $18.25. Silver, though, traded within a margin of $1.43, much higher than the previous week in terms of difference, with a high of $24.40 and a low of $22.97. Closing nicely again within our standard trading range, and dipping slightly into our outlier range for a short period during the week. Now, each morning we have produced, as mentioned, daily updates expressing the reasons for the various price movements, with Monday, or really Sunday, having a flash crash when Asian markets opened, followed by a slight recovery and then further slow declines until Thursday, Friday, with gold then closing just off from its week's high, but above the previous Friday's close. Economic data for much of the week was broadly in line with expectations, but Friday's University of Michigan's Consumer Sentiment Index fell to 70.2 in August, and it is in fact the lowest level since the most difficult period of the pandemic back in April 2020. This surprised markets a little. In July, by comparison, the index was 81.2, so it's fallen from 81.2 to 70.2. That's not encouraging. Now, there is no doubt, in our view, that gold is essentially caught between two opposing and contradictory forces. One, the strength of the global economic rebound, and that's in spite of rising COVID Delta infections. And two, the uncertainty of the Fed tapering its bond buying program and the earlier introduction of interest rate rises. Which is why, on Wednesday, the FOMC minutes might prove interesting. Now, generally speaking, unless something untoward's happen, we do not really expect to see any rate rises until at least the end of 2022, and more likely into 2023. But we can foresee tapering, more likely to start early 2022 or late perhaps 2021, but at the moment we're banking on 2022. But some economists, we have to say, are predicting the start of a tapering as early as September. We're just not totally convinced at this stage, especially as import prices, which were announced on Friday, were lower than expected. And we've seen falls in CPI rates. Now, inflation, or perhaps inflation concerns, are nevertheless going to have some of the greatest impact on gold prices moving forward, by definition because of their effect on the value of the US dollar. Now, the technicals suggest support at March lows of $1,677 for gold and resistance at $1,787, and psychological resistance, in fact, at $1,800. Short-term momentum has turned positive, and the fast stochastic has generated a buy signal, while the MACD points to consolidation. So we're likely to get consolidation in an upward temperament. Silver's taken a bit of a beating, but prices did rebound somewhat on Friday, not enough to catch up with what it had lost, but it rose again like gold because of decreasing consumer sentiment and also import prices reporting lower figures than expected. Silver has support at the August lows at 22.10 and resistance near the 10-day moving average at 24.31. Short-term momentum has also now turned positive as the fast stochastic generated a crossover buy signal, and like gold, the MACD histogram also points to consolidation. So what's really going to affect the price of gold and silver this coming week in terms of economic news and reports? Well, on Monday we have the Empire State Manufacturing Index for August, Tuesday retail sales, industrial production and capacity utilization all for July. Slightly less important, if we're frank, business inventories for June, and the NAHB Home Buyers Index for August. Now, Wednesday we have building permits and housing starts both for July, and more importantly the FOMC minutes, though again we're not really expecting to find out anything too different from that. Thursday, though, we have the weekly jobless claims, Philadelphia Fed Manufacturing Index for August, and the index of leading economic indicators for July. And on Friday, surprise, surprise, nothing scheduled at all. So whereas we're used to seeing most of the movements on Friday, unless something political or geopolitically happen out of the ordinary, then we should see most of the action earlier in the week. So really most of our attention should be directed to Tuesday in particular, with a review of Wednesday's FOMC minutes, which, as mentioned, should not necessarily tell us anything we do not already know. And then we should place our attention again on the data on Thursday. So, where do we see gold and silver prices moving next week? Well, we still have to consider the $1 trillion additional infrastructure bill, which looks like it will now eventually be signed by President Biden. And once completed, this will no doubt spur equity markets further, at least short term, and again act as a slight tailwind for gold and silver prices, as yet even more money printing is going ahead. The fear of inflation and a fall in economic recovery due to COVID-19 and its Delta variant are both omnipresent and should not be discounted. That said, we were impressed with Friday's rally, and so next week we're expecting gold to trade between $17.25 at the lowest end and $18.25 at the highest end, though we envisage it more to be in the middle, with $16.75 and $18.75 as outliers. Silver to trade between $23 and $24.50, slightly better than last week, with $22.50 and $26 as outliers in case there is a sudden purge upwards that we're not actually expecting. What are your thoughts? Do share them. We still think there's going to be a degree of positive momentum short term, but depending on what happens vis-a-vis the bond buying and the Fed's announcement on interest rates, they could still act as headwinds against gold and silver prices. Please share your thoughts. Thank you so much for listening. If you haven't done so, please give us a thumbs up, subscribe to the channel, and press the bell sign. Finally, we wish you a safe, enjoyable weekend and a most prosperous week ahead. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.